I personally think it could be something to do with the gold revaluation because I think they're desperate, the US government and the Treasury, because this war doesn't seem to resolve itself. The longer it goes, the more prejudicial it is for the economy. What do you think?
I think a revaluation to, let's say, around the current price of 5,000 US dollars would allow them to at least pay for the war. But if they want to reduce the debt a little bit, let's say by a couple of trillion, they'll need to revalue the gold to a higher price, let's say 10 to $15,000.
Yeah, I wouldn't put it past him to revalue even to 30,000 and you know.
A potential shift is emerging as policymakers increasingly consider gold revaluation to stabilize mounting fiscal pressure. As debt rises and geopolitical tensions intensify, many see the need for a monetary reset. MarioInnecco, a financial commentator focused on monetary systems, and Clive Thompson, a respected wealth strategist, explain that revaluing gold could give governments a mechanism to address fiscal strain without defaulting on obligations. They highlight that even a move toward $5,000 per ounce could help offset short-term funding pressures, while higher revaluations in the $10,000 to $15,000 range could begin to meaningfully reduce sovereign debt burdens. In more extreme scenarios, valuations of $30,000 or more are not ruled out, especially if confidence in fiat systems continues to erode. The discussion reflects a growing view that gold may once again play a central role in restoring balance to the global monetary system as traditional policy tools lose effectiveness. Now, we present the clips from their interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you and enjoy the video.
I personally think it could be something to do with the gold revaluation because I think they're desperate, the US government and the Treasury, because this war doesn't seem to resolve itself. The longer it goes, the more prejudicial it is for the economy. What do you think?
I think a revaluation to, let's say, around the current price of 5,000 US dollars would allow them to at least pay for the war. But if they want to reduce the debt a little bit, let's say by a couple of trillion, they'll need to revalue the gold to a higher price, let's say 10 to $15,000. And there's some talk about it. We're hearing whispers a bit left and right that the revaluation is coming. Now, if they do revalue, the question will be, are they going to revalue it at an official level where everyone can buy and sell for the US government at that new revalued level, or is it just going to be an arbitrary figure they pick out of the sky?
Yeah, I mean, you remember last year, I think we spoke about this already. Even the Board of Governors, they published this article by Colin Weiss, Official Reserve Revaluations, the International Experience. So it's not like something that we're just making up out of the blue. It says here for the US, this would involve revaluing 261.5 million troy ounces from, well, the current statutory price, Clive, that the last time they revalued it was 1973 from $38 to 42.22, and it's still valued at that level, which I think equals like $11 billion. So if they revalue at the time of this article, gold was 3,300. Now it's 4,700. So if they revalue it to five, like you said, they'll get like 1.1 trillion, I think, extra. And yeah, the other thing, Clive, with the war, it looks like the Trump administration is becoming more and more divided. The MAGA movement, they're not as popular. So they could do something like a big stimulus check because part of the title of the video is $10,000 stimulus. And that sounds a lot, but it would be for households that earn under $120,000, which equates to about 90 million people. That would be about a trillion that they would need. So it's not out of the question that they could do that, especially if they do that, before July 4th as a you know,
Well,
you're
there's
like,
the magic, Mario. He revalues gold to, let's say, $5,000 for simplicity, creates just over $1 trillion out of thin air, which is done via a sale and repurchase agreement with the Federal Reserve. Magic. They keep their gold. They got the money, distribute to everybody. Everybody's happy. Everybody thinks
yeah,
Trump's a wonderful guy.
yeah, and there's no increase in the national debt either, is there?
No, because when you do the sale and repurchase agreement, effectively, the Federal Reserve ends up with something called gold notes, which are not part of the national debt. They are perpetual, i.e., never redeemable, and they pay no interest. So it's a wonderful way for the government to lay its hands on a ton of money without any negative consequences whatsoever on the national debt.
Yeah, I mean it's even better than like we can do because let's say we bought gold 10 years ago at $1,500 or even less. Uh, if we want to cash in, we have to sell it and give up our gold, but the US government doesn't have to. It has a piggy bank called the Fed that will just print the money for them and give them the difference. Um, and the thing is, Clive, back in 73, that was the second time they revalued in a year because they revalued in 72 from 35 to 38. And so that's kind of a layered revaluation. I think they would be doing that again because they might need more spending money. Uh,
Yeah, they might do it multiple times. They might
yeah.
do it as a first step to 5,000, then to 10, and then to 15 over,
Yeah.
let's say, a 4-year period.
Yeah, and the other thing is, Clive, when they revalued it to 42.22, gold was already going towards 90 or $100, and we never, that became like a floor, 42.22. So even if they were revalued to 5,000, most people might think, oh, that's not enough, but gold will go through the roof if they revalue just to 5,000, I think.
I mean, the ultimate precedent for this is what they did on the 31st of January 1934, when I think it was called the Gold Reserve Act. Basically, the day before, they effectively sequestered all the gold belonging to the Federal Reserve in exchange for these so-called gold notes. And the very next day, they then revalued gold from $20 and what was it,
67?
67 cents to $35. An increase of what, something like 60, 70% in one
Yeah,
day.
yeah.
Obviously solved the government's problem because they now had a ton of money with which to pay their debts.
Well, not only that, it was used to start the New Deal, all the because so many people were out of work, right? In the height of the Depression, 1934. The other thing it did, it helped create the Exchange Stabilization Fund, which they still have. So yeah, it's what kickstart the New Deal, and it could kickstart the U.S. economy as well if they do that. I think definitely is a big possibility that what he means by the world's biggest reset could have something to do with gold revaluation. I can't think of anything else, Clive.
Well, if there's any president who's got the balls to do it, it's President
Oh,
Trump.
oh yeah, yeah,
He's
I
done an
know.
awful lot of things without
I
asking
mean,
permission, and he's going to do that if he wants it.
he's doing so many things now that seem like crazy that yeah, I wouldn't put it past him to revalue even to 30,000 and you know, there's
But
a
he
question.
wants he would like to go out with a big bang as the greatest president of all time. And of course, if you do effectively reflate the economy by revaluing gold, and suddenly there's a whole bunch of money and everybody's spending and enjoying it, people are he's gonna say, look how wonderful the economy is, thanks to
Yeah.
me. It'd be a wonderful trick. If I was him, it's what I'd do.
Market participants are increasingly building a narrative around gold revaluation as a possible answer to rising fiscal pressure and prolonged geopolitical strain. As debt levels climb and economic stability weakens, advocates argue that revaluing gold offers a rapid way to inject liquidity without expanding official debt metrics. At current reserve levels of roughly 261.5 million ounces, even a revaluation to around $5,000 could generate over $1 trillion in financial flexibility, with higher levels such as $10,000 to $15,000 offering a pathway to offset larger portions of national debt. Historical precedent, including the Gold Reserve Act, shows that revaluation can rapidly expand government balance sheet capacity. Mechanisms such as issuing gold-backed notes through the Federal Reserve could allow liquidity creation without formally increasing debt, effectively enabling large-scale stimulus or economic support. Layered revaluations over time could further amplify this effect, potentially driving gold prices significantly higher in the open market as confidence shifts. Let's get back to the interview.
There are some early signs that we're entering the next phase of the super cycle. I mean, the world economy tends to go through these cycles of commodities, then financial assets, then commodities. And we've been through an extremely long period of financial assets with the equity markets going up and up. I know we've had the dip in 2022, the bear market 2022, but broadly speaking, we've had many, many years of rising equity prices. But there are signs that might be starting to change a little bit in the direction of commodities. I think it's very early days, but the rise in the gold price, I think, is the signal that something's coming. And of course, we've seen silver rise on the back of that. It's more than double the price it was a year ago. Well, oil, it's 30% above where it was a month ago, 2 months ago. Now, that's obviously due to the closure of the Strait of Hormuz. I say closure because officially it's not closed at the moment, at least not during the ceasefire. But I don't think there's a lot of stuff going through. So, and then if you look at the price of a lot of raw commodities, they seem to be, I won't say all of them, but some of them are creeping up. So I think we could be entering this super cycle of commodity boom.
Yeah, me too. So I agree. I think we are entering a new reality, and mainly because the uh, the debt-based system that we have, which is created via the petrodollar and the fiat dollar and all the other fiat currencies, is coming to a point where it's getting out of control because the debt is so big, and also the fact that bond yields are starting to rise. So we have a bear market now in bonds, and we had a bull market, Clive, in bonds when interest rates and yields came down, always came down. They did go up, but eventually they used to come down. That was from 1981 till 2020 or thereabouts. And now it's the other way around. So yeah, that's really bearish for financial assets. And I mean, I've been warning about this since 2020, even 2019, because I knew, having worked in the bond markets, that we were probably near the end of the bull market. It doesn't happen overnight, but like you said, I think gold is pointing to it. And someone asked if they revalue gold, will silver also go up? Of course, I think silver will go massively higher. And I think Trump uh, wants commodities higher because it will help, uh, because the US has a lot of natural resources, and Canada, and it will help those countries start exploring more and developing more their natural resources, because China has done all of that the last 30 years.
Yeah, I mean, I think that's the direction of travel. If you've got a portfolio now, I think it's time to be taking a little bit of money off the table from the technology sector, the high-flying technology sector. I'm not trying to say it's over or anything, but there are some signs that it might be going into a decline, maybe a 20% decline, which is a bear market. So time to take some money off the table, put it in the direction of broad-based commodities. And I don't mean buy the commodities directly. You don't go and buy oil directly or copper direct. That's not a good idea. But what you can do is invest in the mining companies or the net beneficiaries of these products when they rise in price.
A transition is unfolding beneath the surface of global markets, with leadership shifting from financial assets toward real assets. After decades of equity and bond dominance, early signals now suggest that commodities are reasserting themselves as the next major cycle. Structural forces now drive this shift instead of short-term speculation. Rising bond yields push valuations across equities lower, reversing the long bull market that followed declining rates from the early 1980s to 2020. At the same time, investors see strength in gold and silver as an early indicator of capital rotation into hard assets. energy markets also show stress, especially as disruptions to key routes like the Strait of Hormuz push prices higher and reinforce inflationary pressures. As debt levels rise and monetary systems face greater constraints, capital slowly moves toward sectors tied to real resources. This trend does not mean financial markets will collapse immediately, but rather signals a gradual rebalancing as commodities and resource-linked equities begin to outperform over time. Share your thoughts on their analysis in the comment section below. If you find this video informative, please support and turn on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.